Hey, good morning, guys. It's Brian. Hope you're doing well today. Just going to run through the numbers really quickly and let you guys get on with it. Uh, big, I talked about it in the update last night, but, big moves yesterday following kind of an end of the day tweet by Trump, kind of putting a stall on the CARES package. So the market reacted pretty unfavorably to that over the course of the end of the market trading session yesterday, but it's been rebounding quite a bit this morning. So that takes us into what we're going to talk about here just a little bit in the future side of things, with just having a plan and working a plan and not getting too excited about what we think is going to happen or what could happen or what might happen or the next tweet or whatever that might be, right? Just have a plan and stick to it. That'll get you through, the good times and the bad. As long as you stick to the plan. Wheels come off when we don't stick to the plan. It's kind of like that old Mike Tyson quote, right? Everybody's got a plan till they get punched in the mouth. That's kind of what happens often. We walk into trading and we have a plan, and then something happens and it's outside of what we expected, and emotion takes over, and we start doing things that aren't to plan, and that's when everything just kind of blows up or implodes or crumbles or whatever you want to use for that occurrence, right? But anyway, long and short of it is this. We're going to check out what news is occurring today so that we can plan our day based on known events. We're going to have a look at the forex market, look at what that's doing, see what potential opportunities are there at the open of the session. We're going to flip over to futures, talk about kind of key levels and ways to come at the market today. And then I'm going to let you guys get on with your day. And then as we get later into the day, if we had some tradable opportunities, we'll recap those. All right, so let's kick it off over here. Well, no, not over there. Let's kick it off over here. News calendar. Again, I use Forex Factory. You can use whichever one you want. This one's just familiar to me because I've been using it forever. But, FX Street's got one, Bloomberg's got one, Financial Juice has one. This is my friend Amar's website. It's a great resource. I encourage you to use Financial Juice. I don't want to sound like an advertisement for it, but it's a buddy of mine, and I like what he's done. He's been very committed to this for years now, and it's a really good program. It's a good site to use, and it's a news aggregator that pulls in headlines from various news sources and tweets and everything else. Anyway, there's a news calendar here as well, so you can see what's going on. But ultimately, what we do is we look at this to try to see if we have any red reports. The red are the high impact events. Mediums can be, depending on what they are, we might want to watch too, but the red ones for sure we want to watch, because these are the ones that have the potential to be, or a higher potential anyway, to be greatly impactful to the overall markets. So Fed meeting minutes come out later today. That's at 1 p.m. Central Time, 2 p.m. Eastern. And that's where we'll get a look into, a bit of the notes of what was happening as they were, trying to understand economic and financial conditions and how that influenced where their vote was as far as interest rates go. So, it's not necessarily, I've never actually read it. I don't really care. But, end of the day, it's what happened. Well, I shouldn't, that's not really true. I do care, and I do want to know kind of what the outcome was, but I've never taken time to read the meeting minutes. A lot of people watch these events because they want to try to take action immediately on that event. So when I say I don't care, I don't care what the outcome is immediately or what blurbs, the scraper engines might be looking at to get out of that, to make a decision to automate, to signal some automated trading. I don't want to trade during this. I'd rather let whatever happens, any red report, not just this. I mean, it's any high impact report. I don't want to know the outcome necessarily immediately, because I don't want that to influence my trading bias, right? When people sit there and a report's coming out and they're refreshing their browser, all the seconds leading up to and at the report time, they're doing that because they want to know, it was forecast to come out at 65 and it came out at 67. Now I'm going to do this action. And they're trying to take that immediate action on what occurred there. more power to you. I just found that gut wrenching. It's like, and often the market does exactly the opposite of what you, quote, think it should do anyway. So let the news come out, let the market digest what happened, let the market pick a direction, and then trade the direction of the market. That's, for me, the sanest way to do it, less stress way to do it, lowest stress way to do it. You know, we talk about just hopping on the freight train, going for a ride, you know, jumping on the elephant's back, not trying to change those directions or, you know, anything else. That's when you get run over, you get trampled, right? So anyway, I don't want to spend too much time on that. I've spent way more time than I needed to talking about news. But ultimately, we look at the calendar to see what news is coming up today. You know, we have some news at 1, but that's well after my trading time. You know, so there's nothing in the morning that would impact what we're doing over here. All right. So with that said, we know that we've got kind of a clear condition to begin trading for the day. And that leads us over here to see what, you know, currencies are moving, because the US forex session just began 2 minutes ago. So what currencies are actually moving? We've got the pound is certainly a weak currency here, just moving weaker and weaker. It's been sold off, and if you look comparatively, the USD, the Euro, and the CAD are all stronger currencies in relation to that pound. So we're seeing divergence here between these. There's definite divergence between the Euro and the pound. Also, you know, between the Euro and the CAD, and at some level between the Euro and the USD, although the USD does seem to be moving back towards the midpoint. So if we get a little push here with the USD beginning to be more heavily bought again, that would give us that bump of divergence that would allow us to get in to a pound USD trade, or maybe even potentially a pound CAD trade. Why not the pound euro? Well, you know, the pound euro, it's still active today, but it's not super highly active typically during this part of the session. And you know, we've already moved. If you look at the euro versus the pound, we've already moved, you know, 60 pips. The average is 65 to 70. So, you know, not really enough volatility there to get us that quick 20 pips that we're looking for on kind of an early market breakout session. So, you know, we'd be focused more on the pound versus the USD or the pound versus the CAD. You know, pound versus the USD, you know, moved 80 pips on an average of about anywhere from 120 to 130. So that's certainly got some, quote, you know, gas in the tank if it, you know, chooses to continue moving. What we need to see here is, obviously we would need to see the pound continue to weaken here in relation to the currencies, but we'd also need to see the USD begin to pick up some steam being bought. What that would do for us is we'd see divergence. Number one, we'd see that these two are actually moving apart from one another. Number two, that might flip our volume detail to show us that we've got conditions that are favoring continued selling of the pound versus the USD, and that would break us out of the bottom of this box, which would give us that opportunity to get in. The pound CAD has got all the conditions already lined up for us. It's moved 94 pips. Its averages into that 135 to 140 pip range. So, you know, again, the opportunity for that quick 20 pip hit is certainly there. Right now, the pound CAD looks a lot better than the pound USD. The volume detail is there. It's been, you know, moving in the direction of that current intraday trend. Looks a lot better than the pound USD. So I'm going to look at this pound CAD as my tradable opportunity again for the day, and we'll see what happens there. And just a quick break of this bottom level, see if we can pick up a quick 20 pips on that one. All right, sliding over here to the futures market. This one's where we saw, you know, a lot of turmoil yesterday. Oof. Get that. We can just get all the. Let's see if we can get all the. There we go. So yeah, a lot of turmoil yesterday on this one. This is the S&P. Just starting off here, what we've got right now, leading up to this moment, is a mixed bias. However, if this stays here, you know, above 3070. We'll see the bias flip over to be a long bias, which is in the the confirmed direction of the 4 hour. So 4 hour bias is long on the S&P, 30-minute bias technically is short right now, but certainly could flip over to be a long bias prior to the market session beginning, the regular trading hours beginning here in an hour and a half. So what do we want to watch on this one? The key levels that we'll want to keep an eye on: 30.80, same as we were last week actually. 30.80 and 30.60 will be the spots we'll want to watch as we get into this today. Breaks above 30.80, breaks above, close above 30.80, even 30.90 if you want to be more conservative, but breaks above 30.80 might give us that opportunity to continue long, which if we stay above here leading into the regular trading hours, this may flip over and we'd have the 30-minute bias would be in agreement with the 4 hour bias. So 30.80 looking here as potential longs. Breaks back down below and closes down below 30.60. Obviously at that point your bias would be mixed anyway, but that also would be kind of a decision point for us that it may be continuing further down south. The way to, there's multiple ways to trade it. You can just bracket orders in here and look at, breaks above, if we're going to bracket an order, you might look above 30.90 and below 30.60 or even below 30.50 to see for breakouts there. The short would certainly be counter to the 4 hour trend, but you could certainly play breakouts there. But if you're trading with the trend, wait for the biases. If the biases are confirmed, you'll be looking for longs. If the biases are mixed, you wouldn't be doing anything. You'd be sitting on your hands, which after a volatile day like yesterday might be a good idea today anyway. But, if this stays up, the trend would be back to the long side and you could look for long trades. If you're looking for longs, again, breaks of 30.80, breaks of 30.90 to go long. If you're looking to go long on a pullback, pullbacks to 33.70, 33.60. But if it breaks below 33.60 and starts pushing lower, especially if it breaks below here and closes below here, I'd be hard pressed to continue long, because that might be the signal that we're starting to roll over and go back short again. So 30.60, 30.50, kind of your big decision area here, but 30.60 would be where I'd call it. If we break and close below 30.60, I feel like that's going to be the point where it rolls over and continues back down short. So I wouldn't look for bounces much below 30.60. I mean, you could look at 30.50 just because it's a big whole number here, but I think your bounce area is 30.60. If it doesn't bounce off of that, you call it, and you don't continue looking for longs after that. But the other way to play it, if this does close up and we get a confirmed bias on the 30-minute to be in line with the 4 hour, then we could certainly be watching for short pullbacks on the 30-minute here, and then playing a breakout of the close of the previously closed lower high, right? So a couple ways to come at it, but do be cautious. Don't. A lot of people look at big candles like this and they go, "Oh my gosh, look at that opportunity." This was out of left field, guys. This was no opportunity. This was a crazy emotionally driven movement, right? Don't get caught up going, "Wow, I hope if I jump in today, I can pick up some points, that maybe it'll move again like this." And maybe it will move again like that. Who knows? In whatever direction. But don't get so caught up in looking at stuff like this, because folks often get caught up in what they missed out on and lose sight of what's available to us. And what's available to us, it's like walking up and going, "Man, if only I'd hit a home run yesterday." And you got all these really easy pitches coming at you today, and instead of just taking a nice base hit, you keep swinging for the fences. It's all about getting base hits, guys. Just the steady base hits. Get on base, get on base, get on base, get on base. That's what it's all about. That's what wins games. Using another sports analogy, blocking and tackling, just the fundamental, just the basics. If we just keep doing the small stuff, the little stuff, the stuff that gets us there, which is the small base hits, eventually that 1 or 2 home runs every now and again is what just drives it home and makes us a big winner. But the base hits are what win games. So don't get so caught up in looking at something like this, going, "Man, if only I had done, whatever." That doesn't do you any good. Focus on what we can do today. What we can do today is have a good plan, have a solid plan, approach the market in a specific way that allows us to take advantage of the right conditions. So again, we're going to wait. Right now, right now technically this bias is mixed, but if it stays up here and our 30-minute is long, the green crosses over the red on our moving averages, right? And we have a confirmed bias where our 30-minute bias is in agreement with our 4-hour bias, then we'll be looking at long trading opportunities. That can look like breaks of 3080, breaks of 3090. If we're looking for breakouts, pullbacks, as far as 3360. If it breaks below 3360, I would say that would be the spot to maybe start looking at some shorts and or just keep your fingers off the button altogether. Going over to crude, crude is in a mixed bias right now. The 4-hour is long, 30-minute is short. I'm sorry, 4-hour is short, the 30-minute is long. We've got a mixed bias on crude. That's telling us, hey, just keep your fingers off of this thing because the market's a little bit manic right now. What we are seeing is we're seeing a bit of a top setup over here. Setup right over here in this 40-50 area. So 40-50 seems to be a pretty good resistance point here on the 4-hour chart. It's been hit and keeps breaking back lower. Certainly if we rally and break above 40-50, that could be a potential spot to look at continued longs on that. It would be in the counter direction though to the 4-hour trend. I mean, the safest thing right now is just to keep your finger off the button since we have a mixed bias. From a downside perspective, if things do roll over here, you'd probably be looking at about 39 down here as that breakout point to continue short on crude. But again, the biases are mixed. That tells us to just sit on our hands and not do anything, which is often one of the best ways to approach it in tumultuous times, right? Gold is short. The bias in the 4-hour is short. The bias in the 30-minute is short. So we'd be looking back at short trades here. Bounces off of 1900 back down to the low side. Breakouts below 1885 down here to the low side. Of course, the other way to approach it is just let the market continue making higher lows and higher highs, and then buy a breakout as it moves back in that short direction, or I say as if it moves back in that direction short as it breaks down below that previously closed lower high. That'd be the way to look at that. So there we go. There's some opportunities. There's some ideas for you. Talked about tradable levels, key levels. The big thing today is just, be safe. Don't try to guess what the market's going to do because no one really knows. But it certainly has gotten back. A lot of what had been sold off yesterday has been recouped over the off trading hours. But we're coming up to a big decision point here. 33.80. Big decision point here. So how this level is handled, how it's to see how well it's respected as the new session begins, that will give us some idea of what might be happening here. So just be cautious. Don't get antsy about it. Be patient. Breathe. And let the market do its thing, and then execute your plan. Know what you're going to be doing before the market starts, and do that. And if those whatever conditions you've got laid out that need to occur before you can press the button, make sure those conditions occur. If they don't occur, then don't press the button. That's it. I'm gonna leave it there. Have a great day.